Welcome to this video on the Reserve Bank of India's Master Directions for Repurchase Transactions, also known as Repo transactions. Released on November 11, 2025, this updated framework outlines key regulatory updates for India's financial markets. Today, we'll take a deep dive into these directions and understand how they impact repo transactions. Repo transactions play a crucial role in the financial system. They allow entities to borrow funds by pledging securities as collateral. Since their introduction, these transactions have been regulated by the Reserve Bank of India, and the updated directions reflect changes necessary to keep pace with the evolving financial landscape. Key updates in the directions. One significant change in these directions is the inclusion of municipal debt securities as eligible collateral for repo transactions. These securities were specified by the central government on October 22, 2025 and now have been incorporated into the master directions. Applicability and scope. These directions apply to all repo transactions carried out on recognized stock exchanges, electronic trading platforms, and over-the-counter markets. However, repo transactions conducted under the Liquidity Adjustment Facility or the Marginal Standing Facility will continue to be regulated under existing rules. Definitions. Let's go through some key terms used in the directions. Corporate bonds and debentures refer to non-convertible debt securities issued by companies. Government securities are defined under the Government Securities Act 2006. Haircut refers to the difference between the market value of the collateral and the amount borrowed against it. Eligible securities. Under these directions, a wide range of securities are eligible for repo transactions. Government securities issued by the central or state governments, listed corporate bonds, commercial papers, and certificate of deposits, debt ETFs, municipal debt securities, repo participants. Eligible participants in repo transactions include regulated entities such as banks, financial institutions, and listed companies. This ensures that all participants are governed by the regulatory framework of India's financial system. Tenor and trading process. Repos can have a tenor ranging from 1 day to 1 year. The transactions may take place on recognized stock exchanges, electronic platforms, or over-the-counter markets. This flexibility helps participants manage liquidity according to their needs. Reporting and settlement. Repo transactions, especially those executed off exchange, must be reported within 15 minutes. Settlement happens on a delivery versus payment basis, ensuring that funds and securities are exchanged simultaneously. Repo trades in government securities are settled through clearing agencies like CCIL. Collateral pricing and margining. Collateral pricing in repo transactions must be transparent and market-based. Haircuts are applied to collateral based on the type of security. For instance, listed corporate bonds carry a minimum 2% haircut, while commercial papers and certificates of deposits carry a 1.5% haircut. Accounting and disclosure. Repo transactions must be accounted for according to specific guidelines, ensuring transparency. Participants are required to disclose details of these transactions in their financial statements, ensuring clarity in their financial reporting. In summary, the Master Direction Repo Transactions Directions 2025 brings key updates to the Indian financial landscape, especially with the inclusion of municipal debt securities. It ensures that the repo market remains a vital tool for liquidity management, promoting stability in India's financial system. Thank you for watching. If you found this video helpful, don't forget to like and subscribe for more updates on financial regulations. Moonses and Management Consultants LLP, a trusted partner for SEZ and IFSC excellence, a pioneer in establishing SEZ and IFSC units within GIFT City and India, delivering end-to-end IFSC setup, operational support, and handling compliances, risk management, renowned for deep expertise in regulatory approvals, capital markets, fund management, insurance, finance company, foreign university, BATF, and ancillary regulations, and fintech, expertise in custom clearance, for aircraft and ship procurement, leasing, GST, DSPF, IFSCA, comprehensive support covering registration, reporting, and regulatory transitions, ensuring ring fencing, transparency, and global compliance standards. Join our network, scan the QR codes below to stay connected with us.